Hello, everyone. Welcome back to the Weekend Charts. I'm your host, Charlie Bilello. Today, special edition. I'm going to run through 10 things to be thankful for. Tomorrow's Thanksgiving. I thought it'd be a perfect time to do this. I often end each show with something positive. Today, it's going to be all positive, all 10 things indicating positive things in the markets, in the economy. If you're watching this on YouTube, take a quick moment and hit that subscribe button for all the latest content from us. And let's get started here. Number one, falling jobless claims. So there's been a lot of concern about the labor market in the U.S. I've talked about a number of indicators weakening in the U.S. in terms of the labor market is definitely cooling. We could see that here in terms of the unemployment rate moving up once again here to 4.4% in the latest reading. That's the highest we've seen in a few years. Still, though, well below the historical average, which is 5.7%. And the good news here is that, well, yes, we're seeing the labor market cooling. We're seeing companies really pull back on new hiring, but we aren't seeing yet the massive amount of layoffs that really tends to accompany recession. So if we look at this chart here of jobless claims during recessions, you tend to see it move higher and continue to move higher. We're not seeing that today. It's actually at its lowest level since August, looking at 223,750 over the last 4 weeks. That's the lowest since August. And so yet another false start in terms of the jobless claims numbers have spiked in the summer of this year, the summer of 2024, the summer of 2023, and all 3 years you can see by the end of the year moving lower, doing that once again this year. Hopefully this continues into year end. A great sign for the jobs market because it's a leading indicator. It's really the best real-time look we have at the jobs market, really saying, well, how many people are filing for unemployment insurance? And as long as this is low, the labor market is in good shape. Number two, more affordable rents. This is hugely important for so many people that are in the rental market because this is often the biggest expense that people have is that housing payment. And what we've seen over the past few years is rents after that post-COVID spike become more affordable because rents have really gone down on a year-over-year basis now for 2 straight years, while we've seen people's hourly earnings, people's wages continue to go up. And so I'm adjusting it for hourly earnings here. And what we're seeing going back to 2017, it's never been lower than it's been today. So looking at rents adjusted for wages, never been more affordable than today going back to 2017. And this is great news for people that are waiting to purchase a home because I've talked about the lack of affordability in the housing market, least affordable housing market in history. So if you're renting and you're waiting to buy a home, the good news is it's much cheaper to rent than if you were to go out and stretch and try to buy. It's actually the biggest spread we've seen in history, 40% more expensive to buy versus to rent. So you're actually pocketing a huge amount of savings if you're waiting to purchase a home. Then you're in the rental market right now, and each and every month, as I've been talking about, it's becoming more and more affordable to rent, and we're seeing supply in the rental market continue to go up, so I expect this trend to continue for at least a few more months in terms of rents becoming even more affordable. Number three, record household net worth. So looking at the last 30 years in the U.S., a 6x increase in terms of household net worth. We're talking about 26 trillion in 1994. End of 2024, 160 trillion, just a huge advance over this period of time. What's driving that? Obviously higher stock prices, higher home prices, and the average American better off over the last 30 years. And if we look at 2025, what are we expecting for net worth in terms of the household net worth in the U.S.? We should be expecting another record high this year as long as we don't give up these gains, because 95% of major asset classes higher this year. Stock market doing very well in the U.S., but even better outside the U.S. Commodities higher. Everything pretty much doing well in 2025 should lead to another record high in household net worth. Number four, no recession this year. So big change for what we saw in early May after the tariff tantrum. Huge amount of recession fears in the U.S. I'm showing you here the odds on Poly Market, one of the betting markets. May 1st, 66% were the implied odds of a recession in terms of the U.S. economy going into recession at some point in 2025. And today, I looked at the chart here, updated here, just 3%. And I would argue it's probably zero unless something crazy happens in the last month. We shouldn't see a recession this year. Look at the Atlanta Fed here. What are they projecting for third quarter GDP? 3.9% increase is their latest estimate. So next I want to talk about being thankful for a diversified economy. So if you look at 100 years ago or 200 years ago, we saw recessions in much greater frequency than we're seeing today. And that's because we really were reliant more on just a few industries. Today, many different industries contributing to the overall US economy. And I think that's best illustrated here. Looking at the last 30 years, the best performing stocks in the S&P 500, you can see not just one industry, are they coming from many different industries. So for sure, there's a lot of technology stocks, Nvidia's there, Amazon's there, Netflix, Apple, but you have many other areas as well. You got REITs, you got retail companies, you have beverages, you have biotechnology stocks. So within the US economy, highly diversified, many different areas contribute. And this is great from the employee perspective as well. When you're thinking about a career, thinking about what you want to do, you don't have to just pick one area because it's the only area in an economy. You could figure out really what's your skill set, what's your passion, what are you interested, and really go into that area because there's opportunity, as we can see here, pretty much everywhere. You have to find obviously a great company and great people to work with, but you don't just have to pick one industry in the US. So I think that's something definitely to be thankful for. So let's go to number 6 here. One of the greatest comebacks in history. That's exactly what we've seen this year. Nobody was predicting this back in April. Why not? Because the S&P 500 back then was down 15% on the year. It was actually the fourth worst start to a year in history. But as I said at the time, the year's not over. Anything can happen. We've seen great comebacks in the past. We saw it back in 2020, and we've essentially had a repeat performance of back then, 37% return. Really one of the great comebacks we've seen in the past 50 years. 2009, 2020 also would be on that list. Just an enormous comeback for the S&P 500. Here's the visual. Went down 20%. We had a bear market from the February peak to the April low, and now a 37% advance on a closing basis. Number 7 here, earnings growing this year at 2 times the historical average. So historically, S&P 500 has grown its earnings about 6% per year. We're seeing more than double that over the past year, 13% earnings growth, new record high, with 94% of companies reported so far in the third quarter of 2025 on pace here for a new record high. And looking at margins, we don't have the complete data yet. We still have 6% of companies to report, but it might be a new record high in terms of profit margins, meaning the S&P 500 companies have never been more profitable than they are today. Let's go to number 8 here, a record number of 401k millionaires in the US. You can see the progression here from the third quarter of 2022, 261,000. A year later, 349,000. A year after that, 544,000. And now the latest number at the end of the third quarter, 654,000. That's according to Fidelity. So more than doubling over the last 3 years in terms of 401k millionaires at Fidelity. And if we look at IRA accounts, you're going to see a similar progression as well. And the great news is more and more people are participating in these 401k plans. You have about 50%, about half of workers now participating in the private sector in 401k plans. So great news. And this is the number one way people become millionaires in the US, is simply taking a part of each and every paycheck and putting in a 401k and letting it compound over time. Let's go to number 9 here, capitalism, which is responsible for just huge wealth increases as we've shown in the US. It's also responsible for the US companies here being the best in the world. Top 7 companies in the world are all US technology companies. You got Nvidia, Apple, Google, Microsoft, Amazon, Broadcom, and Meta, top 7 companies right now in terms of market cap. We look at the top 25. You have 21 out of those 25 companies coming from the United States. And you can see there's 4 other countries listed here. No country has more than one, with the exception of the United States. And if we're looking at the S&P 500, do you need to pick any one of these individual stocks? No, if you just were an investor overall in the S&P 500 over the last 30 years, you would have made over 10% per year, cumulative gain of 1,770%. And you can see what's important is time in the market, not timing the market. You can see the 1-year return here, 14%. We go out to 5 years, 97%, so almost doubling your money. The last 10 years, 278%. 20 years, 664%. And that 30-year return, 1,770%. Just really remarkable. Was there a lot of pain along the way? For sure. We had two 50% bear markets. We had the COVID bear market recession, the 2022 inflation spike. But through all that, the S&P 500 still producing an annualized return of over 10% per year. Rising real wages, we have to end with my favorite chart, really showing the health of an economy better than anything else. And as that is answering the question, well, are workers doing better? Are their wages going up more than inflation? And for a few years, for 2 years, the answer to that was no. We had 25 consecutive months of negative real wage growth in the U.S. It was not a good situation. Inflation, prices were rising more than people's wages. And in the past 29 months, though, we've seen the opposite. We've seen people's wages go up more than the CPI reported inflation rate. That's a great trend. That's what leads to prosperity in the long run, is people's wages going up more than the price increases. That leads to an increase in purchasing power. It leads to an increase in real wealth. And that's how you should measure prosperity over time. So this is a great trend for the American worker. Thankful for this, and hopefully this continues. I'm going to end it right there. Thank you, everyone, for joining me on the Week in Charts for this special edition. Have a very happy Thanksgiving, and I'll see you next time on the Week in Charts.